Yo, what's up YouTube family, and welcome back to my channel. I am Ty the Investor, and I'm here today with another wholesale real estate video. In this video, I'm going to be breaking down how to read a settlement statement or a HUD statement for your wholesale real estate deals. If you don't know what a settlement statement or a HUD statement is, it's pretty much a receipt for the real estate transaction. It's going to have all of the information regarding numbers with that particular property. The sales price, attorney fees, closing costs, loan payoffs, taxes, all these different things are going to be identified and located on this document. Here's an example of a settlement statement for one of my previous deals. Before we get into the video, I realized that you weren't subscribed to the channel. If you can hit that like button, that helps with the algorithm so the video can be exposed to people like yourself so they can get the same value that you're about to get. Hit that subscribe button. By subscribing to the channel, that lets me know that the content that I'm providing, you are getting value and is helpful. As always, thanks for your support. Now let's get into the video. So as we look into this settlement statement, one thing I want to identify and note is that not all settlement statements will look the same. Depending on the closing attorney or title company, they will have different formats, but all of the information housed on these documents are going to be exactly the same. It might be in a different format or whatever the case may be. But in this example, particularly, is broken up into different sections, which is pretty much easy to read. So we have the top section here, which is going to house the information of the closing attorney or title company. This middle section here is going to have information such as the property address, the buyer name, the seller name, if there is a possible lender on the deal, the settlement date and the disbursement date. Settlement date is pretty much the closing date. The disbursement date is pretty much the day that the funds were dispersed to everyone, right? Then you have the bottom section of the document here, which is broken up into three different parts. You have the seller side right here. You have the itemized list of charges or what is being charged for what. Then you have the buyer side on this end. And then at the bottom, you have the totals. So we're going to go through this line by line just so you can identify and understand what all this stuff means. So we're going to start from the seller side, right? On the seller side, you're going to see two columns, one being the debit and the other one being a credit. A debit means money is being deducted. A credit means money is being added to that seller's total, all right? So we're gonna go through the list line by line and talk about the numbers and talk about what's being charged. So right here, we have a credit of $97,272. That is the sales price of the property, okay? So that's being credited to the seller, which means that's being added to the seller, right? But out of that, you're gonna have debits, which are deductions, which is gonna give that seller their net amount. So now as we go through the line, then you have a debit or deduction for $93.79. That's taxes, right? Taxes from the beginning of the year until the day that the property sold. That's what the seller has to pay for, and that's what the seller is responsible for if they haven't paid them in full for the entire year. If they have paid the taxes in full for the entire year, then they will be credited back the difference that they paid, right? So once again, taxes are going to be a debit from the beginning of the year to the day that the property sold, unless the seller paid the taxes in full, which would then be a credit to the seller. Now we're going to go down here to the next line and we have payoffs. Payoff to PNC Bank, which is $86,447.87. Basically, that's the remaining mortgage balance for this particular property. In order to close the deal, the amount that you offer to the seller has to be more than that payoff amount so that the seller does not have to come to the closing table with cash to close the deal, all right? And they can walk away with some money in the pocket. So that's a debit. So that's gonna be a deduction from the actual total sales price of the property. Now we go into $75 deduction for a seller post-closing fee to the attorney. That's just the attorney fees that they charge for whatever. You never know. Then you have another debit or deduction of $785.44 for a water bill balance. So this was an unpaid water bill that the seller had over the course of who knows how long. So they have to pay that off as well, which was essentially a small lien on the property. And now we have all of our debits and we have our credit, right? So now we're gonna go into the total. So the total here, we have the total debits, which is the total amount of deductions totaled up to $87,402.10, right? And we have our total credit, which is $97,272 from the sales price of the property. Now you subtract the debit from the credit, right? The deductions from the credit, and we're gonna get $9,869.90, which is due to the seller. So this means this is the amount that the seller will be walking away with at closing in form of a wire or a check. So the difference between the total debit and the deductions and the total credit, which is gonna be the due to seller amount, all right? And then obviously the bottom line here, this is just gonna be the total to make sure that it balances out. And that's the seller side. Now we're gonna go over to the buyer side. Mind you, the seller wasn't responsible for any closing costs or anything like that, so that's gonna be handled on the buyer side of the settlement statement. So now, same thing with the buyer, we have a debit column and a credit column. Deduction, debit, credit is an addition, essentially. So from the buyer, is gonna be a deduction of $97,272 because that's the sales price of the property, right? Then we're gonna have a credit of $2,000, which is the deposit or the earnest money deposit, right? That's from the buyer. Then we're gonna have a credit of taxes for $93.79, which essentially balances out because it's a debit on the seller side, so they cancel out. So that means the buyer isn't responsible for the taxes from the beginning of the year till the day that it's sold. That's why it's marked down as a credit, but essentially it balances out and cancels out because it's a debit on the other side. Then we got the recording fees and title fees, which are essentially all of the closing costs, okay? So you have recording charges of $29.75, and these are all debits, right? These are all deductions from the buyer. You have transfer taxes, which is $97.30. That's transferring the title and all these different things. Then you have title insurance, $494. Then you have a settlement fee, $600. This is what the closing attorney charges to do the transaction, the paperwork. Then you have a title search fee, which is $250. Then you have a tech fee. I don't know what that is, but they charge it, $79. And then you have down here the assignment fee, right, to Property Jet Real Estate Solutions, right, which is $22,728. And then you have in that section all of the totals for the buyer side, right? So the total deductions from the buyer are gonna be all of this added up. All of this added up to $121,550.05. Then you have the total credit, which is gonna be all of this added up, which is the earnest money deposit and the taxes, to $2,093.79. And you're gonna subtract these two numbers, and this is the total amount that the buyer has to pay, that's due from the buyer, okay? So the difference between these two numbers is gonna give us $119,456.26. So the buyer has to come to the closing table with this amount, the seller has to get this amount, and the difference of that will be the assignment fee, all right? And there are all the totals at the bottom. And that's pretty much how you read a settlement statement for an assignment transaction. Now, on a double close transaction, it's gonna be completely different. It's gonna be two settlement statements, one on the A to B side and then one on the B to C side. The A to B side is between you and the seller. The B to C side is between you and the buyer. And those two settlement statements are gonna be completely different, and there's not gonna be an assignment fee on that settlement statement. So you'll just have to do the math between the total numbers from the buyer, due from the buyer, and the total numbers from the due to the seller section down here on the separate documents. And that's pretty much how you read a settlement statement or a HUD statement. I hope you found this video helpful. If so, please like the video, subscribe to the channel for more content. And if you have any questions or need some more clarification, please comment below and I'll make sure to address those questions so you can have a full understanding. But until next time, thanks for watching and I'll see you on the next video.